Right now there's panic and chaos in Italy as the markets fall. Volatility has risen along with political tensions. There must be a solution given to the markets. Either the ECB needs to ramp up the printing presses or the government must create more stimulus. They have to act quick or this could certainly trigger the global economic collapse. You came here for the truth, so let me unveil that for you. Today I have an absolutely jam-packed episode for you. We're going to focus on what's happening in Italy. This is in continuation to the other videos I've done recently. There's so much to cover. I'm going to get into it right away as fast as I can. I will try to bring this information to you in a concise manner, looking at the EU banks, and you can see what has happened here. Deutsche Bank being one of those that has fallen. Of course, all of them in Italy are falling, and the contagion has even spread to the US banks as well. Okay, looking at all the markets, in fact, they are falling at this time. The euro denomination risk, I've shown you this before, and it's getting even worse as the days go on. You can see Italy here spiking, but also in there is Portugal and Spain too. Italy's 5-year CDS. The CDS has moved to the levels it hasn't been at since 2013. The CDS, which was largely responsible for what happened in Greece, here is being used again against them. So this is a big problem here with the CDS. I'll talk about that more in a moment. Italy, Germany spread 10-year, 2-year. You can see that this hasn't been at these levels since 2011. The euro crisis levels and many indicators I've shown you over the past few days have been brought back into that time frame of the sovereign debt crisis, the euro crisis, and everything that followed afterwards. There's no good signs coming out of Italy right now at this time. Even if they get a new government, even if everything is right and everybody is happy in that way, you still have all of the existing problems that eventually will have to make their way to the surface. It's being buried right now. Now, looking at this here, investors are taking the risk that Italy could drop out of the euro seriously, judging from a quirk in swelling prices for contracts that protect against a debt default. And that is, of course, what happened with Greece. Now, the drop in the euro and the in-countries stocks and bonds are a sure sign that markets are unnerved by a stop-start efforts to form a new Italian government. The gap between the old and new credit default swaps, which pay holders if Italy fails to pay back its debt, offered the cleanest measure of the risk that those new elections would effectively represent a referendum on euro membership. So they're betting on this right now. We'll see where it goes. It's just heading upwards and upwards on those CDS, and that's not a good sign for things to come. Looking at this, when we have the at the bottom, it says German target 2 credits in green versus Italy's debits in red. So somebody's making money and somebody's losing. German central bank just keeps racking up more credits, and the Italian central bank borrows more and more. It is truly the way things are going. It looks like Germany is one of the very few that are benefiting from this whole euro. It's a disaster, and Italy is definitely losing out. In my opinion, I think they should just take the pain, leave the euro, go back on the lira, create something new, whatever you have to do, and basically have a few years of pain, and then you'll be able to restore everything. Okay, looking at this here, the Italian BTP 10-year yield, it has spiked as well. I mean, the 2-year has spiked. Italy's power struggle could be a flashpoint for market contagion. Okay, that's the word they've used out of CNBC, and I've been using this word specifically about Italy right now. I use that word in both of my books. I think it's so important to understand. If you just look at the economic fundamentals of Italy, they are worrying. And that's what I'm trying to present to you right here, because you can see that fundamentally we have big problems right now in Italy. Forget about all of the things that have come up within this last, let's say, week or so. Just look at the problems underlying all that and you see it is a disaster waiting to happen. So here they are talking about Paul Krugman, and this is part of his tweet of what's happening here in Italy. You don't have to like the populist parties who won a clear electoral mandate to be appalled at the attempt to exclude them from power. Faith in the single currency trumps democracy? Really? European institutions are already suffering the lack of legitimacy due to democratic deficit. This will make things much worse. Look at what happened in Greece. They said, we are going to allow the people to choose. Do you want to have a third bailout? Yes or no? Take it to the polls. You decide. Overwhelmingly, the public said, no, we don't want it. And then what happened? The very next day, they said, we are going to accept the bailout. That's the way it works. They don't give a damn what people think. If they don't vote in the way that they want them to, they'll simply go ahead with it. They don't care how many people are screaming and causing a havoc in the streets. It doesn't matter. In the Eurozone, the move in German yields makes the sell-off in Italian debt look even more extreme. The gap between the 10-year German and Italian bond yields, which is a key indicator of market stress, that's why I covered it before, has risen above 2.75 percentage points, its widest since 2013. And it goes on to more details here about what's happening. But essentially, you can look at this from all different angles, and no matter how you look at it, it is insane. It's terrible. Now, this spreads, this contagion, all the way across the pond into the US. Dow drops nearly 400 points after Morgan Stanley, JP Morgan lead the bank stock tumble. This is something that we need to be looking at, because you think, oh yes, it's in Italy, it's not my problem. Oh, it's in Europe, it's not my problem. Oh, wait a minute, it's made it over the water and now it is here. But you need to look at it and think to yourself, is it just affecting financials? Well, of course, right? I mean, it's just the financials, nothing to worry about. My Apple stock will do just fine. Well, let's cover that more in a moment. Bloomberg Dollar Index, looking at this right here, you can see that it has been going to new highs here in the recent past, climbing, escalating versus other currencies. Always remember that. What are we talking about really here? It's against things like the euro. It's against things like, all the other currencies out there. And at the same time, you have volatility increasing. Volatility should be significantly higher, but at least it has come up. At least it has come up. We can see that there's some level of legitimacy in this here. But I'm sure tomorrow everything will be just fine according to the volatility index. The S&P financials, you will see that declining here, going in line with what I showed you at the beginning. The US banks declining also. Here we have the FANG Plus index. That's right, a little bit of a decline. Whether or not that will continue, we'll have to see. This right here is just a great picture. I wanted to show it to you and highlight how strange this is here. It's like she's pushing him away. Don't touch me. Don't touch me. I just thought it was funny. Anyway, looking at this here, I wanted to point out from this, the institutions that once failed to stem a blow out of bond yields with tentative purchase of sovereign debt from affected countries has morphed into a more self-confident actor with a toolbox that includes a meaningful, if untested, backstop to defend the single currency. So they've created something that they like to call outright monetary transactions. That's right, because previously they had to, jump through a few hoops, and that's too much. Okay, everyone, let's not do that. Let's not jump through the hoops. Let's just get right in there and let's do what the Bank of Japan does. There's more in this article here about that, but if you want to, you can just search online and look for outright monetary transactions. I believe they're going to go up and buy basically everything. They're going to buy it all up, and they will use this. This is what Draghi had talked about in 2012, saying we will stop at nothing. They're going to buy up everything. I think they will. I think they'll do exactly the same as the Bank of Japan. So that's an assumption, of course. I don't know, but we'll have to see. Big buying. ECB has consistently overbought Italian bonds relative to its capital key. Looking at the purple line here, you can see that it has definitely been one that has been purchased more so than Portugal, for example, which is, here, or we're looking at Germany or any of these other countries. France seems to be one that has actually exceeded it in this case anyway. But what's important to note, as I mentioned previously, if you haven't seen it before, is that all of these countries, all of the central banks, all of the governments, they own each other's debt. So a problem in one country will become a problem in another. Then you have on top of that all of these CDS, credit default swaps. These become a big burden on the country if things start to get messy. And I assure you, there's a whole bunch of CDS just waiting for Italy to not pay their debt. So I'm interested to see where this goes. This is probably going to be posting around the same time that the markets open. So I'm assuming that the market's going to have to fall further until the ECB or the government comes out and makes a statement saying, don't worry, we're going to fix everything, we'll print more money, and that will give some relief to the markets. Now, this is also going to be posting before the American markets open. I'm interested to see what happens there, because after that several hundred drop fall, what's going to happen after that? Will it continue the fall, or whether that will be used as a buy the dip type of opportunity? So that's all for this video. I'm going to let it go there. I went on too long, I'm sure, but I was speaking very quickly, trying to get everything right in there, squeeze it all in, and I hope I was informative. If I was, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. By supporting me, you help to get this information out to more people. So all you gotta do is give me a thumbs up and just comment down below, say hello, say thank you, say Italy, say Viva Italia, say whatever you need to. It just helps me out a lot, so I do appreciate that very much. And last but not least, if you found this video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you have to do is go to Amazon. You can click on the link in the description of this video. It'll bring you over there where you actually have this look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.